All right, so let's get started here. Good afternoon, everyone. My name is Franco Zerini, Senior Branch Manager with Community Member Services here at Van City. Welcome to Navigating First-Time Home Buying. We'd like to begin by acknowledging that Van City operates on the unceded lands of Coast Salish people, represented today by Musqueam, Squamish, and Tsleil-Waututh nations. They have been custodians of this land since time immemorial, and as visitors, we'd like to start this webinar by paying our deepest respects to its elders of the past, the present, and leaders up and coming. Slide. Today's webinar is on buying your first home, the all-in-one experience. This webinar will be recorded and be posted on YouTube on our YouTube channel following the event. If you haven't already, please make sure you follow us on YouTube and our various social media platforms to stay connected and get access to some great content similar to this webinar. The Q&A button will allow you to submit a question, which will be available during the presentation. We'll be answering those questions. We will be answering those questions after every single presenter, and if time permits, we will have some time at the end of the session, and we will continue to answer questions. Lastly, we want to encourage everybody to engage with us during the webinar. Take note of what's most valuable to you, and also what might be most helpful for you. Today we are covering first-time home buyer's journey with our Senior Account Manager, Cassidy Roeder, an introduction to home insurance with our account representative, Marcia Jean-Baptiste at CMHC, and the start to finish process in your real estate transaction with notary Puneet Jain with Puneet Jain Notary Corporation. So let's get started on our journey, and I'm going to pass this off to Cassidy Roeder, Senior Account Manager.
Good afternoon, everyone. As Franco mentioned, my name is Cassidy Roeder, and I'm an account manager at Van City's Burnaby Heights Community Branch. As much as I have experience on the professional or lending side of mortgages and the home buying experience, I am also a recent first-time home buyer and want to help you and take you on your home buying process and journey, whether this is your first time you have ever considered buying a home or you are already actively starting to search for your first home. Move to the next slide, please. We have broken down the home buying process into a 5-step guide, and in the following slides, we'll kind of go through what to expect at each step more in detail and what you might need to do as you're going along your journey. Step 1 we have is deciding if home ownership is right for you. Step 2 is talking to Van City about qualification and options. Step 3 is finding your realtor and finding your right home. Step 4 is completing the deal, and step 5 is settling into your new home. Next slide, please. So as mentioned, the first step is deciding if home ownership is right for you. This may seem like a very simple question and answer. However, there are some factors you may want to consider before committing to a mortgage and home ownership. These are things like costs and responsibilities, as well as some of the benefits of renting versus buying and vice versa. Next slide, please. We've put together a little bit of a list. It's not exhaustive of some of the pros and cons of buying and renting a home, and we'll go through them. And I'll touch a little bit upon what they mean, but these are some of the basis of what you want to look for. So pros of buying a home is that you have the freedom to renovate. As you are the owner, you don't have to ask anyone's permission to do things. Now, if you're in a strata property, you might still need to get approval on some structural changes, but you don't need to ask any landlord if you can paint a wall or hang a wall mount. You can make that decision for yourself. You also have the ability to build equity in a safe and secure investment. So as you have put your own money towards your property and as you continue to pay down your mortgage, you are actually building your ownership and that asset in your name. In the future, there could be potential for rental income as maybe you move on to future homes. And this also does provide financial security for your future as well, for your family or for retirement. Some considerations to look at are the ongoing costs of owning a home. These could be monthly strata payments, annual property taxes, regular maintenance and repair costs, as well as insurance. So besides the initial cost to it, these are other things that you have to save towards going forward. There's also the large commitment at the beginning of the process for your down payment. This could mean that you're putting a large portion of your savings into the purchase itself and kind of depleting what you've already worked for. Lastly, one of the main things as well is the market dictates the value of your home or can also dictate if your mortgage payments will increase. So if you're needing to sell, it does depend on market conditions at that time. Some pros that we have for renting a home is there's less maintenance and repair costs that flow to you as the tenant. Most of them are passed along towards the landlord or you would get reimbursed for them. There's lower upfront costs. You're not having to put hundreds of thousands of dollars into a down payment. Most likely your upfront costs are going to be maybe a couple months rent as a security deposit. It also does provide you with a shorter term commitment and flexibility. So although oftentimes you might be tied into a 1-year lease, there are always ways for you to get out of that if the home is no longer suitable for you. Considerations, of course, for renting a home is that there is possibility your rent could increase year over year. There's always the risk that your lease may not be renewed, and you're not building equity. So overall, when you are paying your rent, you are not putting it towards your own asset. You are giving it to someone else. We'll move on to the next slide, please. So as you have started considering if home ownership is right for you, you don't need to have fully decided yet to know yes or no, but this is where step 2 comes in, and we want you to talk to us at Vancity to learn more about your qualifications and your options. In this step, we will tailor our conversation and our appointment to where you are on your journey. So if this is your first consideration of home buying, it might look a little bit different than when you're actively ready to search. In this appointment, we'll talk a little bit about the requirements that are required for qualifying for a mortgage or buying your home. This will look like things like income and employment and what documents we might need for those, your credit score as we pull updated credit bureaus for you, and debt servicing. So debt servicing is actually how we qualify you for a mortgage. And essentially in this process, we look at your current debt payments, so credit cards, loans, lines of credits, including the current potential mortgage and property tax and strata if required, and compare it to your income. And essentially, only a certain portion of your income should go towards your debt expenses. At Vancity, we do also stress tests when we mortgage qualify. So what that means is when we are doing this calculation, we qualify your mortgage payment at a higher rate than what your actual contract payment will be to ensure that if we are in an increasing rate environment, like we have been over the last couple of years, that in theory, your mortgage payment should still be affordable for you going forward. We'll talk about things such as down payment. So when you're purchasing a home, unfortunately, we cannot lend you 100% of your purchase price. You do have to put your own funds towards it. This can be as low as 5%. And Marcia, I think we'll talk a little bit more about this later on, but we can also plan for your down payment. So if you don't have those savings in place, we'll talk about things like a first home savings account, your RRSP that you maybe have already developed, and how to use the home buyers plan and how to start building your down payment to get it where you need to be. We'll talk about your pre-approval. So a pre-approval is a conditional mortgage approval that is based solely on your income and debts and not including the property yet. This is a great step to get when you're starting your home buying process because this will tell you what you could qualify for in a mortgage at current state. This can then help us plan going forward. So if that number is where you want it to be, then you can go start searching for your home. And if it's not, we can help develop that down payment for you or develop or come up with plans on how to increase your pre-approval number. Generally, there's two things that go into a mortgage, and how to increase that is either by decreasing the amount of debts that you have or by increasing your income. Unfortunately, I do not have any say on your income, but I can definitely help you come up with a plan to reduce current debts that you might have to ultimately increase and maximize that mortgage amount for you. In the appointment, we'll talk a little bit about hidden costs that a lot of people don't always think about. You always know about the down payment, but in the home buying process, you want to look at things like lawyer fees that are needed at the end, or sorry, solicitor fees. You'll look at moving costs. A big one that a lot of people don't know about is property transfer tax. And if you are a first-time home buyer, you may be eligible for some exemptions on these, depending on your purchase price as well. So these are all kind of extra savings that on top of your down payment, we want to have money allocated for, so there's no surprises at the end of the day. In the appointment as well, we'll talk a little bit about rates and offers. So on your mortgage, you typically have the option between a fixed and variable rate. And we'll talk a little bit about what fits your situation the best, how this makes your mortgage payments look, and make sure that is something that you're comfortable with. We'll move on to the next slide, please. As discussed in the previous slide, if we've moved on to that pre-approval and you're happy with that number, you would move on to this next step, and this would be your actual home search. So in this step is where you want to meet with and or find a realtor. This is also a great time to determine the priorities that you have for your home. So things like location. Are you looking for an apartment, a single detached home, 2-bedroom, 3-bedroom, little things like that that are going to make a difference to you and things that you want to see in your home. Then with your pre-approval and your priorities, you give those to your realtor, who is ultimately your industry professional at this point, and they are going to bring you options and take you to open houses to hopefully find that place that you want to make an offer on. If that's the case, you then can make an offer on the property because you have that pre-approval in place. Now, as mentioned, a pre-approval is a conditional approval that's only based on your income and debts, not on that property. So when you're making an offer on a property and building that contract, you can make it subject to. And on Vancity's side, we always recommend making it subject to financing. And what that does is it gives us time as your lenders and advisors to ensure that we can provide you with that formal mortgage approval and gives you time to confirm all of your checks are in order. Your realtor may also suggest putting some other subjects in here. So things like inspection to make sure that your home is in working order. And from there, once those are met, you're in a good spot. Next slide, please. Once you've made that offer and hopefully have an accepted offer from the purchaser, you're now moving into the complete the deal step. So as discussed, once you have that confirmed and accepted offer, you would want to come back to us at Vancity with your signed purchase agreement, and hopefully that subject in there where we can now confirm that the property you're wanting to purchase is actually suitable for the mortgage amount we're giving you. So we'll send something out called an appraisal. And that's something where essentially we get a updated value of the property to make sure that that amount, like I said, can secure the mortgage amount that you're borrowing. If you haven't already, at this stage, you would want to engage a solicitor, so a lawyer or notary. And Puneet will go a little bit more into the steps about this and what they provide you with, but they're going to be the ones that do, in conjunction with your realtor, really do support you with the overall transaction. Once you've got your formal mortgage approval, if that's the only subject you've put on, you've hit your subject removal and are ready to move on to that completion date. And the completion date is where the actual transfer happens. So you give the money to the seller and you now get the ownership of the property. And that is typically where the solicitor, notary, or lawyer really does come into play as well to make sure that you are getting into your home. At completion as well, one of the things to look at that not a lot of people realize is that home insurance and or title insurance can be required on the purchase. So home insurance, if you haven't already had it or looked for options when you're buying the home, is a service that we do offer at Van City. So once we get that purchase agreement, we can always refer you off to one of our insurance specialists to provide you with some quotes and get an idea of what's required. And the insurance on your home is what would protect you in the instance that something were to happen. So making sure that your asset, this probably the largest asset at this point that you have bought, is protected and you are protected. If we move to the next slide. Lastly, you have now, the property is in your name, so you are ready to settle into your new home. You'll have your possession date, so you've completed the deal. You now have the keys to your new place, and you may need to book your move depending on what type of property you move into. If it's a strata, typically you'll need to book that with them yourself. For the most part, all the heavy lifting will be done on the mortgage side. You can take relief in that, but you'll still have the heavy lifting for the move. But there's things to consider after the purchase is done, like ongoing costs and considerations, making sure that your mortgage payments are set up properly or the money is in the account where you need the mortgage payments to come out of. Things like strata, so our monthly payments set up on your strata and access that way so you don't have to give a check every month. And lastly, because a large portion of your emergency or of your savings has gone towards your down payment, we want you to come back to us and we want to engage you again on how we can help building your emergency funds back up for you and your savings for your RRSPs or those updated renovations you may need to be doing on your home. So really after your purchase, we want to keep involved with you and your home and help you along that journey going forward as well. Last but not least, of course, we want you to enjoy your new home and get settled. So if there's anything we can do on that end as well, I'm not a mover, but we want to help you along that process too. Last but not least, Van City did just launch a new first-time homebuyers hub on our website. So please use the QR code there. It will direct you directly to the page where it gives you a little bit more insight about these steps that we've just gone through, some calculators that we have available for you, like home affordability. It also includes a lot about our current rates and current offers that might be tailored to you as well. And we do highly recommend you booking an appointment with one of our advisors at Van City to help you along and get your home buying process started. Thank you so much. I know this has been a lot of information, so we do have that Q&A period now. So if any questions have come in, I'll be happy to provide some answers.
Absolutely. We do have a few questions coming in, Cassidy.
Mm-hmm.
Says, hi there, just curious about this. Since houses have become so expensive, I've considered buying pre-sale. Is this something that Van City often sees? Is there a different risk with a pre-sale, or would this be the appropriate route for a first-time home buyer?
That's a great question. And I actually myself, as a first-time home buyer, bought a pre-sale that just completed this year. So a pre-sale is a great option for first-time home buyers because typically what it allows you to do is space out your down payment. So rather than needing to have, let's say, $100,000 saved up and need to be paid right away, it usually spaces your down payment out over 2 years, 2.5 years, kind of depends on the property itself and what's allocated in the contract that you've signed. One of the risks or considerations of buying a pre-sale is that typically at Van City, our mortgage pre-approvals are valid for about 90 days. When you sign that contract, we would be happy to do a pre-approval for you at that point or to take a look to see what you qualify for in a mortgage at that point in time. but we won't be able to hold it until completion. So it does depend on the timeline of the project itself as well. As we get closer to completion, you will want to engage us again and even throughout the process to make sure that that mortgage amount that might be needed to complete is still affordable for you as well. So it's kind of with a pre-sale, I would say it's even more of an ongoing process with us so that we can ensure that it's still something that you can afford throughout the project.
Fantastic. Thank you. One more question, Cassidy, around how can I save for my down payment? What might that look like?
Yeah, it's a little bit different for every individual. As I mentioned briefly in my presentation, at Van City, we do have the first home savings account, and we have the home buyers plan through the RSPs. So those are both registered products that the Government of Canada has announced for us. And this is where we really want to interact with you and come up with that plan. So maybe based on that pre-approval amount and what you actually want to purchase, we can develop monthly contributions for you to get that there. Your down payment could also be a gift from a family member as well. And I know that can be an awkward conversation to have, but it's always a potential that does help first-time home buyers get into the market in conjunction with their own savings. So like I said, I would really encourage you, if you're on that step to wanting to even build your down payment, to come in and see an advisor so that we can give you our best advice and cater it to your specific needs.
Awesome. Thank you, Cassidy. And I'm just going to throw in one more question. There's a question around somebody has missed the beginning part of the webinar, the first 10 minutes, and will there be a recording of this? And the answer is yes. It was acknowledged at the beginning, and so there will be a full recording of it, and you'll be able to, through vancity.com, you'll be able to get onto our first-time home buyers hub, which will take you to a variety of our webinars, this being one of them. So thank you, Cassidy. And again, congratulations on buying your first home in 2024. Now I'm going to pass the slides on to Marcia from CMHC.
Thank you, Franco. And yes, congratulations, Cassidy, on your new home. And thanks, everyone, for joining us this afternoon. It's really exciting to see so many people take the time to learn a bit more about the home buying process. As mentioned, my name is Marcia. I'm with CMHC, and today I'll give you just a brief kind of high-level introduction to the world of mortgage loan insurance. So we can move on to the next slide. So CMHC stands for Canada Mortgage and Housing Corporation. We are a federal crown corporation that has been operating in Canada for almost 80 years. We're generally known for mortgage loan insurance. However, through our people, our partnerships, and the programs that we deliver on behalf of the Government of Canada, CMHC is rising to meet Canada's housing challenges. We work really hard to meet our goal, and that goal being that every Canadian has a place to call home. Our next slide. So what is mortgage loan insurance? So this is not to be confused with home insurance or life insurance. Yes, it is an insurance, but this one is in place to protect the lenders, in this case, Van City, against financial losses in the event a borrower defaults on their mortgage payments. It's offered on loans at up to 95% of the purchase price or market value of the home being purchased. On our next slide here, here is where we consider why would Van City need to be protected against borrower default? So in Canada, home buyers must put 20% down payment in order to purchase a home. So that's what we call a conventional mortgage. In the event that the home buyer does not have 20% down payment to put towards the purchase of their new home, then they can put as little as 5% down. And in this case, we call that a high ratio mortgage. And this is when mortgage loan insurance is necessary and mandatory. So in this case, if Van City lends up to 95% of the purchase price of of the purchase price or the value of the home, we can see that there's an additional risk to them, right? As you know, the lender, when a borrower is not putting as much down payment or as much equity of their own funds into the purchase. So what does that mean for you? So on our next slide here, we have a little example of what difference it makes going from a conventional mortgage to a high ratio mortgage. So in this case, we're looking at a a home that's cost $700,000. If you have 20% down payment, that's fantastic. Your down payment is $140,000. So if you have that, available, great. You're into a conventional mortgage. You may not need to deal with CMHC at all. In this case, you just continue your route with Vancity. However, in the event that you have not been able to build that $140,000 on the same purchase of $700,000, you can put as little as $45,000 down. So now you have a loan amount of $655,000, and we see that's a big difference. Like that's $95,000 worth of down payment different. How long did it take you to save $45,000? How much longer will it take you to save another $100,000 for that home purchase, right? So this is the advantage of a high ratio mortgage. Yes, the premium, like as you see in this case, and we'll look at when we get to the next slide, we'll see how we calculated that premium. There is a fee to you, and it's true, it does protect Vancity. However, the advantage to you is that you're able to get into your purchase, into your home sooner. So when we look at the minimum down payment here, so we did say that we're looking at the a minimum down payment of 5%. In our previous slide, the down payment came up to $45,000. So as you could tell, it's a little bit more than 5%. So the reason why is the minimum down payment requirement is 5% on the first $500,000. So in this case, that would be $25,000, and then 10% on anything remaining. So 10% on $200,000. So that's how we came up with the down payment of $45,000. Okay, now we can move to the next slide. Thanks. So here is our table for our premium calculations. So the minimum down payment, as we mentioned, is 5%, so a 95% loan to value. So in this case, we are looking at a premium of 4%. So that's 4% on top of your mortgage amount, on top of your loan amount. And as you can see, it's a sliding scale. So if you have a little bit more of a down payment, then the premium that is paid to CMHC reduces as we go down. Now, you might be wondering, well, Marcia, you said that the mortgage loan insurance is required on anything, over 80% loan to value, or anything where we're putting a down payment less than 20%. Why am I seeing premiums for 75% loan to value or 65% loan to value? There are situations where even if you do put 20% down or more, the lender might choose to still have that mortgage insured. So it could be a situation where the property is located in an area where the bank or the credit union does not typically lend. Maybe they don't have a branch there. It could be the type of property that you're purchasing that, the Vancity in this case might feel is a bit riskier. So they might still pursue that mortgage loan insurance. And as you see, the premium does go down as we hit that 80% mark. You see a little bit of additional notes, and we don't go into, all the other pricing variations. But one thing to keep in mind, and I'm probably opening a door here that I may not want to, is for first-time home buyers, as of tomorrow, there is a change to the amortization. So they'll be eligible. You could be eligible for up to 30 amortization. So there could be a bit of a pricing change there in terms of the premium in the event that you are eligible for a 30-year amortization. So we'll move on to the next slide. So how do you get mortgage loan insurance? So do you have to contact CMHC? Absolutely not. Once you've visited Vancity, you've visited your account manager, they take on the responsibility of submitting that application to us for the mortgage loan insurance. So you go to Vancity, you go through that whole process with Cassidy. They determine that you will need mortgage loan insurance. So they submit that application to us directly. So we too will review that application and consider 3 criteria. So the borrower, the property, and the financing. So the borrower, that's you. So we're going to take a look at your history, your employment, your credit history, your status in Canada. These are all things that come into play. We also consider the property. So where is it located? What kind of market is happening? What kind of property are you purchasing? Is it a single family home? Is it a condo? Is it a townhouse? These all go into determining the risk of the overall application. Then we also take a look at the financing. So what kind of loan are you getting? Is it a first mortgage? Is it a chattel mortgage? Cassidy talked about your gross debt servicing and your total debt servicing. So these are things that we consider as well. The overall debt that you're leveraging before purchasing a home and after. So these are all elements that come into play when we assess the risk of an application for mortgage loan insurance. We then approve the application, or we might ask for some mitigating actions if we uncover some additional potential risks. So on our next slide here, so these are just a few kind of additional like bonuses, I guess you can get when you go into a CMHC insured mortgage. So we're not going to go into detail with every single one of these programs, but I'll just touch a little bit on each one. So starting with our Eco Plus. So this one is really exciting, and it's a good one for you to keep in mind, especially, you know, in British Columbia. So with the CMHC Eco Plus program, if you're purchasing a home that is considered green or energy efficient, it meets our minimum eligibility requirements, you're then eligible to get 25% of your premium that you pay to CMHC returned to you. So as we saw in our example, let's say on that $700,000 home, you paid, if I remember correctly, it was a $26,000 premium. So you'll get a quarter of that back returned to you in a check from CMHC. Don't we all love getting checks signed by the government returned to us? So, and the biggest advantage that we have here in BC too is that any new construction in BC as of about a year ago, or maybe a little bit more, must be built to BC Step Code 3. So that is the minimum requirement for CMHC in terms of energy efficiency. So if you're a first-time home buyer or even a repeat buyer and you're buying a newly constructed home in BC, and that mortgage is going to be insured with CMHC, you will get 25% of your premiums returned to you. And, you know, when you go through all the costs that are involved with home ownership and home buying, it'll be great to get that money back. We also have a CMHC improvement. So again, if you're talking with your realtor and maybe you're finding that what you can afford is maybe not the kind of home that you want to buy, don't hesitate to look at that fixer-upper, because if your mortgage is going to be insured with us, we can sometimes include the costs to renovate into your mortgage and have the whole amount insured as well. So we're improving the property, and if you're making energy efficient improvements as well, then you get that 25% return to you as well. So these are two good points to keep in mind, especially when you're talking to your realtors and discussing the kind of home that you want to purchase. We do offer mortgage loan insurance to newcomers to Canada, as well as self-employed borrowers, and the CMHC mortgage insured mortgage is also portable, which means if you are, say, purchasing a home today and in a year or two, you have a change in your life. So maybe you get married, or maybe you have children, and you want to, switch homes. So now you're going to sell your existing home and purchase a new one. You're able to port those premiums over to your new purchase. So in some cases, you could end up paying no new premium on your new home, or let's say your loan amount increases, you won't have to pay a full premium again. You would just pay an amount on the additional loan that we're now insuring. So we won't go into too much depth here, but these are definitely conversations for you to have with your account manager at Vancity. So we're going to just kind of quickly go through what can be found on our website. So there's a lot of information. As I said today, we're just doing a brief overview. But if you do visit our website, there is a plethora of information there available for you. So we are Canada's housing agency. So it's pretty much our mandate to make sure everyone is well equipped when it comes to housing questions and concerns. So visit our website. You can click on the consumers portion, and then that way you'll be able to access a lot of different resources. If we move to the next slide, we have different calculators, affordability calculators, or debt servicing calculators. Vancity has those available as well. But if you want to take a look at what's available on our website, you can equip yourself too before going into your branch. On our next slide here, we have a few examples of some of the other resources that are available to you. We have a home buying step-by-step guide that's interactive. You don't need to download like the whole full PDF and print it out. It's interactive. You can access it through your devices. We have buying your first home in Canada in several different languages. If you are a newcomer to Canada, or if you know any newcomers to Canada who may be interested in home buying, our website and our guides also guide you through the rental process. Other handy fact sheets are about maintenance and repairs, things that you may not necessarily think about, in the excitement of buying your first home. You can find a lot of different resources, a lot of answers to different questions that you might have from the beginning to the end of your home buying process. And on this slide here, we'll keep that up with our QR code. This is where you can go to if you'd like to register or sign up for any newsletters that come out from CMHC. We often have them, I think, on a monthly basis, as well as just different updates on the market around you, if that's something that interests you. Any new announcements from the government will be uploaded there. You can get that information easily sent to you into your inbox. So we could leave this slide up, well, we can change it. I was going to say we can leave that slide up just for maybe a couple of seconds so everyone can just access it quickly and then sign up if you'd like. And absolutely open it up to questions at this time, if there are any.
Absolutely. Thank you, Marcia. There is a question in the chat here. What examples of features in a home qualifies for Eco Plus refund?
Okay, that's a great question. So there's two different things to look at. So if you're purchasing, then there's, we have a list of eligibilities. So you can be looking at, well, again, if it's a new construction, you're pretty much in the clear already. If you're buying an existing home, then we go into looking at the oh my goodness, all the words have gone from my brain. The gas emissions, like oh my goodness, greenhouse gas emissions. So a lot of times you'll see on a home, maybe on the meter, like there's a sticker, kind of like on your appliances that you purchase that, will tell you how much energy this uses. The same applies to homes. And if it meets that, I believe it's 20%, if it, consumes 20% less energy than the average home, built to that standard, then that would be one of our requirements as well. You would just need to ensure that, it meets that requirement. Then it'll be eligible for the energy efficient rebate. Another thing to consider is when we're doing renovations, there are three things that we consider. We're looking at the envelope of the home. So they see your roofing, maybe you're changing the roof or changing the windows. Those are things that will help to get towards that eligibility, as well as if you're looking at renewable energy sources. So let's say you're going to add solar panels to your home, that's another thing, as well as your like the HVAC system. Let's say you're changing your pumps, or you're getting a brand new heating system and new air conditioning, and it reduces the energy that's being consumed. These are all components that we consider in terms of renovations for energy efficiency that would make the mortgage eligible for that 25% premium rebate.
Fantastic. And one more question for you, Marcia. Can the insurance premium be financed into your monthly mortgage payments, or must it be paid upfront?
Oh, no, absolutely. It gets financed. If you have an extra $26,000 sitting around that you can pay the premium, I mean, go for it. But no, I would say 99% of the time, actually, I'm going to say 100% of the time, that premium gets absorbed into the mortgage and you just pay it all down as part of your mortgage payment. Yes. Fantastic.
Thank you, Marcia.
You're welcome.
And thank you for that, for the good information and including all the eco-friendly stuff. So we appreciate that. Next, we're going to move on to our next presenter, Puneet Jain from Puneet Jain Notary Public. Puneet, I will pass it on to you.
Thank you, Franco. Good afternoon, everyone. Thank you for joining us today. My name is Puneet Jan, and I'm here to talk about the first-time home buyers program for 2024 offered by the BC government, specifically about the role of a notary public or a lawyer as your legal representative in purchasing the home and facilitating the purchase of your first home. Next slide, please. The home buying process includes several important steps that can differ for each person. As Cassidy covered in her presentation and Marcia covered in her presentation, it's vital to do your research and put in the necessary effort at every stage and to know about those steps clearly. So this is kind of the high level, which is finding a property. The first step is finding a property that fits your needs and budget, research neighborhoods, consider proximity to work, schools, and amenities, and use online listings. Working with a licensed realtor can give you access to exclusive listings and professional guidance to narrow down your options and arrange viewings, which might fit your needs. Secure financing by getting pre-approved for a mortgage. This involves submitting financial documents to a lender to determine your borrowing capacity. A pre-approval, like Cassidy mentioned in her presentation, clarifies your budget and strengthens your position as a serious buyer. Consult ethical lenders like Vancity to explore mortgage options, interest rates, and terms. Understand the total costs, including down payments, closing costs, and monthly payments. So there are no surprises at the end. So yeah, really important. After finding the right property, make an offer. Your realtor will help draft a purchase offer, including your proposed price. There could be conditions like financing and inspection, and in the closing date, the seller may accept, reject, or counter your offer. So back and forth. That's why you need a professional realtor. Quick strategic action is crucial, right? Once agreed upon by all the parties, the offer becomes a legally binding contract. Part of all of this process is before finalizing the purchase of the property, a title search ensures no legal issues with the property, such as unpaid taxes or liens. A lawyer or notary typically handles this, verifying the title is clear for transfer. Securing title insurance protects against future ownership disputes and covers any related costs. Final step, the closing and completion. The final steps are closing and completion. During closing, sign legal documents and pay remaining costs facilitated by your lawyer or notary. On the completion date, the property's title transfers to your name and you receive the keys to your new home from your realtor. And that concludes kind of the purchase. Congratulations on your new property. Next slide, please. Notaries are essential in ensuring the legality and smooth completion of your real estate transaction. Below are these are some of the keys. Key areas where a notary public plays a vital role. Witnessing signatures. One of the primary duties of a notary public is to witness the signing of these important documents. This ensures that all signatures are genuine and that each party willingly agrees to the terms of the transaction. Their presence helps prevent fraud and guarantees the integrity of the documents. Other important factor is the identity verification. A notary public also verifies the identities of all the parties involved in the transaction by checking identification documents. We ensure that everyone signing the papers is who they claim to be. There's lots of fraudulent activities going on, so it's really crucial in preventing identity theft and ensuring the legitimacy of the transaction. Certifying documents. Notaries have the authority to certify copies of important documents, confirming that they're true and accurate representations of the originals. So which is like verifying that you understand the contract. If you're buying a strata property, alongside with your realtor, we go into the details of that. Okay, this is the property that you're buying. This is what you're getting into. What are your monthly obligations, like strata obligations? Why it's important to pay property taxes every year. So these are important things. If as a first-time home buyer, you might not be aware of these things. As a notary, we provide legal advice as well. Apart from the administrative duties, we can provide legal advice related to real estate transactions. We can explain the terms of the purchase agreement, mortgage documents, and other legal papers, ensuring you understand your rights and obligations before you sign anything. Finally, a notary public plays a key role in facilitating the closing of the real estate transaction. We prepare and review all necessary documents, handle the transfer of funds, ensure that the title is correctly transferred to the new owner. Yeah, this is important. Your legal representative ensures everything is legally binding and correctly executed. So that's, I hope this clarifies kind of the role of the notaries in real estate transactions. Next slide, please. Sorry, next slide, please. Perfect. A notary public in BC, in conclusion, the role of a notary public is crucial in ensuring a smooth and legally sound home buying process in BC, from witnessing signatures and verifying identities to certifying documents, providing legal advice, and facilitating the closing. Their expertise and attention to detail are invaluable. Again, I say thank you for your attention. I hope this has provided a clear understanding of the important role a notary public or a lawyer plays in your home buying journey. Now I'll pass it back to our moderator, Franco Durini, who will guide us through the next part of our session. Franco, over to you.
Yeah, thank you, Puneet. So we do have, we've got about another 5 to 7 minutes or so. So I thought we could finish off with some questions that are in the chat. The first question is going to go over to Cassidy. Is there a guideline percentage or ratio that I should save up for all the hidden expenses of home buying, insurance, solicitor fees, all that sort of stuff? So any sort of guidelines or percentages that you use, Cassidy, in having your advice conversations with your members?
Yeah, so actually sometimes we default to CMHC's policy. So if we are processing a CMHC mortgage, you have to prove that you have enough funds for closing costs. And what the guideline they give us there is about 1.5% to 2% of your purchase price. This does vary, of course, based off of what your purchase price is, especially for things like property transfer tax. As a first-time home buyer, there are exemptions there. Depending on the property, there could be exemptions as well. But that would be our rough rule of thumb. I would say probably leaning more towards the 2% now, just with how expensive everything is getting these days. But I think that's also a really good tie into even the solicitor side of things too, is doing your research, knowing where to go to, because you do have to pay for those solicitor fees. So it's a great option to kind of figure out what might be the most efficient for you. On those places, you can save a little bit of money. Same with moving. If you're relying on friends for moving, you might not have to buy a truck, or you might not have to hire movers. So it really is catered to every situation, but rough rule of thumb, I would say about 2% of your purchase price.
Perfect. Thank you, Cassidy. And we have a question from Marcia over at CMHC. Why is there a cap over $1 million?
Yes, so that's a great question. One I think I hear at least twice a day. So the $1 million cap is set by the Department of Finance. So it's not a CMHC rule. Why it's there, that's a fantastic question. If on my understanding, it's the number that the government has come up with determining, when we're especially looking at first-time home buyers and insured mortgages in general, like what is the capacity that someone could actually afford? When we're looking at at a $1 million purchase price, and now we're looking at, say, a $900,000 mortgage. These are the things that are being weighed in. So we do know that, of course, in our region here, especially in the Lower Mainland of Vancouver, we look at places like Toronto, that does really limit the amount of inventory, I guess, that's available for our first-time home buyers. However, at this point, I couldn't really comment on any changes to that or if that will change. Because it's set by the Department of Finance, it's definitely something we can all lobby the government for. So my pitch is talk to your MPs. And get them to lobby for those changes.
Fantastic. Thank you, Marcia.
No problem.
And we have one question for Puneet. When is the best time to engage with my notary in this process?
So I would suggest first, as soon as you sign your purchase agreement, or even considering signing a purchase agreement, you can take that contract to your notary or lawyer, ask them how much will it cost me roughly, the conveyancing process, what will it look like, and everything. And most importantly, your notary or the lawyer can look at the contract and like give you some details, give a layman's common man understanding of the terms and conditions as to like what are you liable for, or what are you getting the property for, or all those details, because some of these details are, as I like to say, hidden in the contract. So it's important to start the conversation early on, especially with the pre-sale contracts. I would suggest speaking with a lawyer or a notary as soon as you have signed, or even before considering signing that contract, because once it becomes binding, then the notary or the lawyer, they can only advise you what you are liable for. But if you go to them before the subject removal, for example, you can pull out of the deal. But your realtor will also advise you on these important things. Thank you.
Awesome. Thank you, Puneet. I appreciate it. So we're coming to a close here. A couple of things I just wanted to say to the audience. First of all, thank you for your time today. We do want to encourage everybody that's attended today to book an appointment with Vancity account manager here. Vancity right now has got some incredibly hot first-time home buyer offers, and we want to be able to have a conversation with you around which one of those offers are going to suit you best. We are top in the market, and I want to put that out there. So I want to encourage everybody. You'll see on the screen there's a link or there's a QR code to booking an appointment with Vancity Account Manager. If your thought today is, I don't need an appointment today or this week, I would encourage you to go in and let's book an appointment for a month from now if you have to, but let's start that conversation. While the conversation starts with your pre-approval and a lot of the process that Cassidy spoke about, we can work really closely with you on what that down payment journey looks like. And so let's start to have some of those conversations. Reach out, book an appointment with either a place close to your work or close to your home. Either way, we have a variety of branches right from all over the Lower Mainland, Squamish, Kelowna, Alert Bay. So we are here to have these great conversations with you and put you into your first home. So thank you for joining us. I look forward to hopefully seeing a few people out in my location, out in Burnaby, and we look forward to being a part of your home buying journey. Thank you, everyone.